So there's big differences, obviously, in terms of the performance of these sectors, driven by local relative prices and factor scarcities and so forth, which give rise to massive differences in terms of incomes per farmers. So we have much higher output per unit of worker in Australia vis-a-vis sub-Saharan Africa, but as I say, on average, lower output per hectare. But again, in these data, just as we saw in the yield data, the same sort of pattern of a slowdown in productivity growth. So what I've done here is got some various clusters of countries in terms of the world minus China, what I call the 80%, that is that there's 23 countries in the world that produce 80% of the world's output in agriculture. If we strip China out of those, so we just have N equals 22, and then the bottom 20% of the countries, that is 157 countries that produce 20% of the world's global output, and look at the differentials between the rates of productivity growth pre and post 1990, and we can see a generalised pattern in these data of a slowdown in this productivity measure as well. As a complement to the work done here in Australia, we've done a lot of detailed work on yet another measure of productivity, that is a multi-factor productivity measure, which is a broader measure of aggregate output relative to all measured inputs. So this is land, labour, capital and so forth going into agriculture. And we've paid a lot of attention trying to account for quality change in machinery that was presented to us earlier today, and in terms of labour and things of that nature. And just as in Australia, we see a very worrying trend here in the US, where a very substantial structural shift in the late 80s, early 1990s, where from the post-Second World War period up to 1990, US multi-factor productivity growth was growing at over 2% per year. Post-1990, it's growing at nearly half that rate, around 1.1% per year. A statistically significant slowdown in 44 of the 48 states in the US, so it's not just the largest states perhaps slowing down and driving the total. There's a very pervasive slowdown in productivity growth in the US. And for other countries where we've been trying to dig up data in the UK and South Africa and elsewhere, we see very similar slowdowns in terms of productivity growth. So one of the culprits that might lay behind this is with respect to what's going on with one of the big drivers of productivity growth, that's investments in food and agricultural R&D. And I'd just like to briefly update you. Some of these perhaps reinforce data or impressions people have today, but hopefully I'll nuance those a little bit with some of these newer data. So over the longer run, it's a fairly, so if we flush out inflation and express these in 2005 prices, over the longer run from 1970 to 2005, we see a very healthy trend in terms of more than a doubling in overall global investments in public agricultural R&D. We've gone from just over $11 billion to about $29 billion. We see Australia's share on that global total falling. So we were around 3%, it's fallen to around 2%. But so has the US share and the other higher income share. So one of the big structural shifts in these data is a shift towards the developing world in terms of the location of performance of this agricultural R&D. So 40% of the research, public research worldwide, was conducted in the developing world in 1970, compared with 47% in 2005. We have estimates of public and private R&D spending in the OECD countries. And our estimates are in 2005 there was about $30.6 billion of public and private spending. Roughly about half of the research in food and ag in the OECD countries is private and about half is public. But Australia's share of that OECD total, this is public and private spending total, is given there. So about 3.3% of the public OECD total, about 1.8% of the private, for a overall share of about 2.5% of public and private ag R&D spending. Again, a huge spatial concentration in the location of food and ag R&D spending. So what I've got in the top graph here is plotted out the shares of select countries, China, Brazil, India and so forth, with respect to LDC, public ag R&D spending. And it turns out that just 3 countries, China, India and Brazil, account for nearly half of all of the developing world's food and ag R&D. 5 countries account for 56%. The same sort of pattern occurs with respect to the shares in the global total. So just 5 countries account for half of the entire world's public ag R&D spending, and 10 countries account for nearly 2/3 of that spending. Australia ranks 40th in that global list of R&D performers, but I note that in 1970 Australia ranked 9th. So as we saw in those pie diagrams earlier, that Australia, relative to the rest of the world, is losing market share with respect to public ag R&D spending. Whilst we see this longer run doubling in growth, if we start splicing the data out by decade, we see both for low and middle income countries, especially for sub-Saharan Africa and the high income countries, this fairly generalised pattern of a slowdown in the rates of growth. So it's not true, as some people say, that we're actually reducing investments in public sector ag R&D, although in some countries we are, and particularly in sub-Saharan Africa, that has been the case. But overall, we're slowing the rate of growth. So in the high income countries, we had, in real terms, back in the 1970s, we were growing at about 2.5% to 3% per annum, and now we're barely able to manage 1% per annum in real terms. I often hear folks saying, well, it doesn't matter that the public sector's slowing down, that the private sector will step in to fill the breach. And the data belie that notion. We can see here that amongst the OECD countries that just as we've had this slowdown in the rates of growth of public spending, we've had a slowdown in the rates of private spending as well. Certainly, private sector ag R&D spending has been growing at a faster rate than public, but not a demonstrably larger rate. So we haven't had this wholesale shift over into private sector performance of food and ag R&D in the OECD countries. We've had sort of an inching up to the point, as I mentioned earlier, that about half of the research is private versus public. I should point out, though, that the first inclination when you put private sector ag R&D numbers up is to think of John Deere and Monsanto and Pioneer DuPont and so forth. In fact, 2/3 of that private food and ag R&D research has got nothing to do with the farm. It's got everything to do with the post-farm food processing and handling sectors. So you need to be thinking of General Mills and Kraft Foods and things of that nature. That's the dominant share of private sector spending in the OECD countries. In the Q&A we can elaborate on that a little bit more if you like. We'd expect large agricultural countries to spend more on R&D than smaller ones. So a common metric that we use as economists to normalise out that difference in the sort of agricultural base that's being served by the research is to develop a thing called a research intensity ratio. So here we're looking at R&D spending relative to the value of agricultural output. And we can see on the left-hand panel in the high-income countries a fairly uniform ratcheting up in the intensity of investments with respect to public agricultural research. In the low and middle income countries, in fact, a stagnation in the intensity of research. So on aggregate, the low and middle income countries are spending around 50 cents on R&D for every $100 of agricultural output, whereas the high income countries are spending around $3 on ag R&D for every $100 of output. If you think back to the earlier slide where I pointed out that the developing countries are gaining a larger share of the total public ag R&D pie, it's not because... What's happening is their ag sectors are expanding faster than the high-income countries, but so they're just keeping up with the rate of increase in agricultural production, but they're not deepening the knowledge base and the R&D intensity within those systems, as has been going on in the high-income countries. To the best we can estimate it, if we factor in the private sector spending, very little of the private sector food and ag R&D takes place in the developing world. The lion's share of it's concentrated, probably over 80% to 85% of that research takes place in high-income countries. So if you look at public and private ag R&D in the high-income countries on the far right there, you can see the estimates are about $5.50 of investment in private ag R&D and private and public ag R&D for every $100 of output. So that belies the notion that agriculture is a sort of technological stagnant industry. It's sitting in the middle order of these intensity ratios with respect to other sectors. There's a lot of other sectors that spend less than $1 for every $100 of output. You have to get into the pharmaceutical and IT sectors for them to be spending $20 to $25 in R&D for every $100 of output. So on a sort of cross-industry scale, Australia's food and ag is a fairly innovative sector. Tracking these intensity ratios out over time, I've plotted a few out for a few countries here, comparative countries with Australia, and perhaps a non-trivial signal of warning for Australia is that Australia is not only losing market share with respect to its total spending, but with respect to the intensity of spending on agriculture vis-a-vis agricultural output. It's lost significant ground over the last 30 or 40 years. Back in 1970, Australia in the OECD countries ranked 8th out of about 27, 28 countries. Now it's slipped to 16th. There's also been a big structural change in food and ag R&D vis-a-vis other research. So a lot of my work is looking at the sources of innovation in agriculture, and I increasingly see lots of innovations used in the agricultural sector that are developed in other sectors. So IT sector, basic biology, genetics, genomics sectors that lie outside of the realm of food and ag R&D are spilling in and increasingly impacting innovation processes within the agricultural sector. So just to give you a handle on, or an idea of where food and ag R&D sits relative to all R&D, here we can see a plot of that ratio of the amount of R&D spending going to food and ag vis-a-vis total R&D spending by the OECD countries, the lower middle income countries, and I've pulled out Australia. So in this period of time over the last 30 years, there's actually been a big structural shift in the Australian performance of food and ag R&D relative to the rest of the sector. So 30 years ago, Australia looked more like a low and middle income country in that regard, that had a much larger share of its total R&D pie with respect to food and ag, but now it's gravitated very quickly towards the OECD average in that regard. So there are these big structural shifts. This is a tip of a larger data iceberg, as I say, that we're going to roll out over the next 6 to 12 months to try and unravel and understand these productivity trends and try and think about the structural relationships between those productivity trends and R&D performance. But just to summarise here in my final slide, to note that certainly amongst the high-income countries, we see in these new data a persistence in the pattern of a slowdown in spending growth with respect to public ag R&D. And in fact, a diminished share of that research related to on-farm productivity enhancement. The slide before that didn't pop up had a picture on there which indicated in the US now, our best estimates are that barely 56% of all of the public ag R&D has got anything to do with farm productivity. So there's been this big expansion in the agenda of problems that food and ag R&D has been asked to address in terms of nutrition, obesity, health concerns, the environmental footprint of agriculture, things of that nature, all of which may have social value, and there can be an argument to be made for putting public dollars into those areas of research. But the fact is that they've come at the expense of, not in addition to, farm productivity-related R&D. So we've got this double negative whammy. We've not only got to slow down the rates of growth, but we've got a reorientation of the research, so particularly in the US, and I hear anecdotal evidence about that going on here in Australia, but I've yet to see any firm data on that. But certainly in Europe, when we talk to colleagues there who are knowledgeable about those systems, the same sort of pressures going on in terms of shifting the agenda away from farm productivity research. A notable exception is China, which has continued to aggressively ramp up its R&D spending. But just to note, when we're thinking about what's happening going forward with respect to impacting productivity growth, it was pointed out we're going to need 1.5 to 1.7% rates of growth in productivity going forward. The sources of innovation in agriculture are and becoming highly spatially concentrated, which is going to have, I think, non-trivial implications with respect to productivity growth going forward. If we don't change the current course, we're going to see a continuation of the current pattern, that is, a slowdown in productivity growth rates. As I mentioned, these take a long time to feed their way through the processes, and so even if we start ramping up investing in R&D now, it's going to take 15, 20, 30 years for that to show up in terms of significant shifts in the trajectory of productivity going forward. In fact, we've estimated for the US, if nothing changes in terms of the orientation or the rate of growth in R&D in the US, they've dropped from a 2% to a 1% per annum rate of growth in multi-factor productivity, and they'll asymptote to a 0.5% rate of growth in multi-factor productivity by 2040, absent a policy shift with respect to R&D spending. So a plea for rethinking and certainly reinvigorating our focus on R&D and a particular focus on productivity-related R&D going forward. So thanks a lot, Sue.